Everyone is asking the same question right now: is NVIDIA stock about to crash, or are we on the edge of one of the biggest mega rallies in market history? Because when a stock moves this fast, emotions take over, headlines get extreme, and investors start making decisions they may regret for years. So today we are cutting through the noise, breaking down the facts, the risks, the opportunities, and the real truth behind what could happen next with NVIDIA stock. And by the end of this video, you'll have a much clearer answer to whether this is a time to panic, hold, or position for the future. Let's start with why NVIDIA has become the center of attention in the first place, because this isn't just another tech stock. NVIDIA is the backbone of the artificial intelligence revolution. Its chips power data centers, AI models, autonomous driving, gaming, cloud computing, and advanced robotics, and over the last few years, demand for its GPUs has exploded at a pace Wall Street rarely sees. Revenues have surged, margins have expanded, and profits have shocked even the most optimistic analysts, which is why the stock has gone on an incredible run that feels unstoppable. But whenever a stock rises this fast, the same question always comes up: is this a bubble, or is this the early stage of something much bigger? And that's where the crash fears begin. Critics argue that NVIDIA's valuation has gone too far, too fast. They point to the price-to-earnings ratio, the massive market cap, and the idea that expectations are now so high that even perfect earnings might not be enough to keep pushing the stock higher. And historically, we've seen this story before: dot-com stocks in the late 1990s, electric vehicle hype in 2021, and many high-flying names that eventually corrected sharply. Now let's talk honestly about the crash scenario, because ignoring risks is how investors get burned. One major concern is that NVIDIA's growth is heavily tied to AI spending, and while AI is a long-term trend, short-term spending cycles can slow down. If big tech companies reduce capital expenditures, delay data center expansion, or decide they already have enough GPUs for now, NVIDIA's revenue growth could cool off faster than expected, and when growth stocks slow down, the market reacts brutally. Another risk is competition. NVIDIA is currently dominant, but competitors are not standing still. Companies like AMD, Intel, and even large cloud players are developing their own custom AI chips. If these alternatives become good enough and cheaper, NVIDIA's pricing power could weaken, margins could shrink, and investors who are pricing in perfection may suddenly rethink their assumptions. Then there's the macro environment. Interest rates, inflation, and global economic uncertainty all matter. High-growth tech stocks are especially sensitive to interest rates. If rates stay higher for longer, future earnings are discounted more heavily, which can put pressure on valuations. Even the best companies are not immune to macro forces, and a broader market correction could drag NVIDIA down with it. Now here's the part most crash predictions ignore: the bull case, and this is where the mega rally argument becomes very real. NVIDIA is not just riding a trend, it is shaping the future of computing. AI adoption is still in its early stages. We are talking about a technology shift as big as the internet or smartphones, and NVIDIA is supplying the picks and shovels for this gold rush. Every major AI model, from language models to image generation to autonomous systems, needs massive computing power, and right now, NVIDIA is the gold standard. The company's moat is deeper than many realize. It's not just about hardware. NVIDIA has built an entire ecosystem around its chips, including software, developer tools, and platforms that make switching away extremely difficult. Once companies build their systems on NVIDIA's architecture, the cost and complexity of switching becomes a major barrier, and that kind of lock-in is incredibly valuable. Financially, NVIDIA is also in an exceptionally strong position. The company is generating enormous free cash flow, it has pricing power, and demand continues to outstrip supply, which is a rare situation. When a company can't make products fast enough to meet demand, that's not a sign of weakness, that's a sign of structural strength. And as long as AI demand continues to expand globally, NVIDIA remains at the center of that expansion. Another reason the mega rally thesis is alive is that analysts may still be underestimating how big AI becomes. Many forecasts assume growth slows dramatically after a few years, but what if AI becomes embedded in every industry: healthcare, finance, manufacturing, defense, entertainment, and education? That would mean sustained demand for high-performance computing for a decade or more, and if that happens, today's valuation might not look as expensive in hindsight. Now let's address investor psychology, because this plays a huge role in what happens next. When a stock becomes this popular, emotions drive short-term moves. Fear of missing out pushes prices higher, While fear of a crash creates sharp pullbacks, this creates volatility, not necessarily a long-term top. It's very possible that NVIDIA experiences corrections along the way, 10%, 20%, even 30% pullbacks, while still remaining in a long-term uptrend. Many investors confuse a correction with a crash. A crash implies a permanent destruction of value, usually caused by fraud, collapsing demand, or a broken business model. A correction is a normal part of market cycles, especially for high-growth stocks, and historically, the strongest stocks often experience the most painful pullbacks before reaching new highs. So what is the truth finally revealed? It's not simply crash or mega rally. The truth is more nuanced. NVIDIA's long-term story remains incredibly strong, but short-term risks are real. Timing matters, entry price matters, and expectations matter. Investors who buy blindly at any price are taking unnecessary risk, while investors who completely avoid the stock out of fear may miss one of the most important technological growth stories of this generation. For long-term investors, the key question is not what happens next month, but what NVIDIA looks like 5 to 10 years from now. If AI continues to scale, if NVIDIA maintains its leadership, and if margins remain strong, the company could justify much higher earnings over time, making today's price reasonable. But if AI adoption disappoints or competition erodes dominance faster than expected, returns could be far more modest. For short-term traders, volatility is the name of the game. Earnings reports, guidance updates, and macro news will drive sharp moves. NVIDIA can drop fast and rally even faster, and that's why risk management is critical. Using position sizing, stop losses, and clear strategies matters more than ever with a stock this popular. The biggest mistake investors make is thinking in extremes. Either NVIDIA is going to zero or it's going straight to the moon. Reality almost never works that way. Markets move in cycles, leaders rotate, and even the best companies go through periods of consolidation. The smart approach is understanding the business, respecting valuation, and aligning your strategy with your risk tolerance. So when you hear people shouting crash is coming or mega rally guaranteed, remember this: certainty is an illusion in the stock market. What we can do is stack probabilities, and right now, the probability that NVIDIA remains a major player in the AI economy is very high. The probability of volatility and pullbacks is also very high, and the probability that patient, disciplined investors outperform emotional ones is almost guaranteed. As we move forward, watch a few key things: data center spending trends, NVIDIA's guidance, competition progress, and macro conditions. These factors will tell the real story long before headlines do. And if you can stay focused on fundamentals instead of fear, you'll be far ahead of the crowd. In the end, NVIDIA stock is not a simple yes or no bet. It's a reflection of where technology, innovation, and capital are flowing globally, whether it crashes short-term or rallies higher next. The bigger truth is that we are witnessing a once-in-a-generation shift, and NVIDIA is right at the center of it. The question is not whether volatility will happen, but whether you are prepared for it. If you found this breakdown valuable, make sure to like, subscribe, and share, because on Stock Predictor, we focus on facts, not hype, and help you think like a smart investor, not an emotional trader.